zero in on the energy markets and gold. We're joined by Chris Louney, who is a specialist in commodities at RBC Capital Markets. Thanks very much indeed for joining us.
Thanks for having me back, Andrew.
Start off with natural gas. We know Canadian natural gas has dodged a bullet here on US tariffs, but presumably economic growth, if it slows, that's bad for gas demand in the long term.
Yeah, the interesting takeaway, I think, from yesterday for U.S. natural gas, as you mentioned, it did relatively escape somewhat unscathed, again, on a relative basis. Mm-hmm. If we think about, as you pointed out, the economic implications for lower demand, natural gas does tend to be more insulated than some other commodities from that type, just because it's used for power, it's used for heat, it's used in cooling demand, but it's not entirely immune. I think the other thing to keep in mind as we look at what other countries do in retaliation, does that have potential downside for U.S. LNG exports? That's sort of where I think there's some bigger read-throughs over the longer term from natural gas, particularly from these tariffs. But the direct impact from tariff yesterday didn't exactly worsen for natural gas. So it was a commodity that is left more to trade on its fundamentals, and it's sort of unique in that aspect.
Interesting. It is down today. That's interesting. I hadn't thought about that. LNG, sales to China, sales to Europe. Mm-hmm. They might say to America, yeah, okay, but we're going to put a tariff on it.
Yeah, it's one thing if one country were to, choose LNG to retaliate, taking China, for example, which already has in prior iterations. But if the whole world starts to turn on U.S. LNG, that could be more problematic. That's by no means our base case. U.S. LNG is needed around the world for power, for energy broadly. But it's certainly something to keep in mind as there's a high level of uncertainty in this tariff-driven world.
Right, but you say it's plausible we could see slippage in natural gas prices amid economic disruption anyway.
Yeah, that's sort of secondary. I do think that, gas, again, is left to trade on its own fundamentals in the near term. And it's unique, particularly coming out of what is being called Liberation Day.
Let's talk gold. You reckon there's just a cocktail of uncertainty, like an exotic smoking cocktail of risk out there. And that tends to be good for gold.
Yeah, indeed. I think gold is super interesting both today and yesterday. It traded lower on the news of tariffs. It does seem counterintuitive. That's not entirely unexpected during periods of economic duress where you're seeing losses across assets. You can see gold, particularly when it's at high prices, being sold to take profits and cover losses elsewhere. I do think that's what's sort of playing out in the near term. But as you're pointing out, the key part of our view comes down to this cocktail of uncertainty. I don't think that's going anywhere. And so I do think gold holds up. So I do sort of put this near term move lower in gold prices, both today and yesterday, as far as we've seen, more in the short term bucket. As we look out towards the medium term and longer term, there's still all of these economic concerns. There's still all of this uncertainty when it comes to tariffs. There's so many things that I think when you think about how people treat gold emotionally as an asset of last resort, as a hedge against uncertainty, that environment is still certainly here. And that's certainly a reason why I think gold will hold up at our revised price levels, which we revised last week.
People must be thinking about that, all right. With equities, or you can see problems for equities here. People must be thinking, maybe I should even own some physical gold at this stage, hide it in my house, although I know that can be a risky policy.
Yeah, I mean, and speaking to clients, I think going into this event, there was a broader appreciation for gold. Investors broadly were looking at risks across their portfolio, and gold looked attractive. There were some sources of hesitation because gold is already at all-time highs, but we did start to see investors layering in. You take ETFs, for example. We've seen substantial inflows in recent weeks into gold-backed ETFs. And so you're seeing that thinking unfold. Right now, in the short term, again, a bit clouded by needs to cover losses elsewhere, and gold obviously has performed quite well just year to date, never mind last year. And so there are some sort of like clouded figures, but investors certainly have warmed up to gold. And I do think as the year continues to unfold, that we'll continue to see inflows into gold as people hedge risks in their portfolio elsewhere, just based on the uncertainty, never mind the economic questions and what could happen in other asset classes from here on out.
President Trump, as you might expect, saying, my policies are not going to change. We'll see, of course, if the stock market sell-off gets bad enough. We just heard from Ed Devlin, formerly of PIMCO. He reckons America has broken trust with allies and trading partners. Could that translate into a reluctance to own the US dollar? Because presumably that would be good for gold as well.
The gold would benefit in a diversification from other safe haven assets, the dollar included. We've seen central banks broadly, as an example, start to increase gold holdings pretty substantially over the last few years. Data from the World Gold Council points to over 1,000 tons being purchased by the official sector in the prior 3 years. And we think another strong year is coming, maybe not at those levels, but I mean, we'll see. Our base case forecast is not those levels for central banks, but it should be strong purchases. And part of that is a diversification of assets. A part of that is a de-dollarization for certain central banks. So it's certainly something to keep in mind that I think, when you think about the broader opportunity set, if you're looking for safe haven assets, gold is very unique in that respect, in that it's no one else's liability. And that's really what's underscored some of the strength that we've seen year to date. And I do think that's probably going to play out, at least supporting gold for the rest of the year.
Do you have any thoughts on whether people should buy gold equities or gold bullion? You're not an equity. Sorry.
I just covered the underlying asset. There are a lot of ways to gain exposure to gold, whether it's through ETFs, anything you're mentioning, futures, physical gold. It really depends on investors' needs, appetite, what their portfolio looks like, what works for them. But there's lots of ways to get exposure to gold. And then the ones that we're tracking, a lot of them look quite strong, particularly for those products that are investor leaning.
Chris, thank you very much indeed.
Thank you.
Chris Louney.